Starting January 1st, important changes to Social Security, SSI, and SSDI will take effect that could impact how and when you receive your benefits. These updates include new payment rules, stricter processing requirements, and deadlines that many beneficiaries are unaware of. Failing to take action could result in delays or interruptions to your payments. In this video, I'll explain exactly what's changing, who it affects, and the specific steps you should take now to protect your benefits. Beginning January 1st, new administrative rules within the Social Security system will go into effect, bringing changes to how benefits are issued, reviewed, and processed. These changes are focused mainly on the procedures behind the scenes and are designed to make the system more accurate, secure, and modern. It is important to note that the rules do not change who is eligible to receive benefits. However, the way Social Security verifies beneficiary information and issues payments will now follow stricter controls to ensure everything is correct. One area where beneficiaries are likely to notice a difference is in the timing of their payments. The Social Security system is increasingly relying on automated verification systems, which check account information such as bank details, addresses, income, and living arrangements. If any of this information is missing, outdated, or inconsistent, the system may pause payments temporarily while the details are reviewed. These pauses are not meant as punishments, but as careful checks to make sure payments are lawful and correct. While these pauses are temporary safeguards, they can sometimes lead to delays if beneficiaries do not provide the necessary updates or clarifications quickly. Electronic payment enrollment is now very important to make sure benefits continue without interruption. Direct deposit to a bank account or the use of approved government-issued benefit cards is now considered the standard way for Social Security to send payments. These electronic methods allow for faster processing, reduce the risk of delays or lost mail, and make it easier to correct errors quickly if they occur. Beneficiaries who have not signed up for electronic payments may find that their paper checks are more likely to be delayed or temporarily stopped as the system moves away from relying on physical mail. The updated rules also stress the importance of keeping all personal information accurate and up to date. Social Security now cross-checks beneficiary information more frequently with records from federal and state agencies. This means that changes in income, employment status, bank accounts, household composition, or living arrangements must be reported quickly. If updates are not provided in a timely manner, automatic reviews may be triggered. During these reviews, payments could be paused until the information is verified. These new procedures do not remove any protections that beneficiaries have. Rights to appeal decisions, correct errors, or request considerations for financial hardships still exist. However, to make use of these protections, beneficiaries need to respond on time and provide proper documentation. Those who actively monitor their Social Security accounts, respond promptly to official notices, and keep all records accurate are less likely to experience interruptions in their payments. The January 1st rule changes represent a move towards stricter oversight and more efficient processing within the Social Security system. Preparing ahead of time is now more important than ever. Beneficiaries should confirm that their account information is correct, that they are enrolled in electronic payments, and that any changes in circumstances are promptly reported. Social Security is focusing on stricter reporting rules for income, living arrangements, and banking information as part of a larger effort to improve payment accuracy and protect the integrity of the system. These measures rely on improved verification processes that compare the information beneficiaries provide with data from federal and state records, as well as financial institutions. Because of this, it is now more important than ever to report information accurately to make sure payments are not interrupted. Income reporting is an area receiving close attention under the updated rules. Reported earnings are routinely compared with data from employers, tax filings, and other government records. If there are differences, such as income that was reported late, unreported self-employment earnings, or changes in work status, the Social Security system may open a review of the account. During this review, payments may be temporarily paused until all information is verified. It is important to understand that these actions are administrative checks, not terminations of benefits. They are intended to make sure that payments are accurate and lawful, not to punish beneficiaries. Reporting of living arrangements is also under closer examination, particularly for programs where household circumstances affect payment amounts. Changes in residence, the number of people living in a home, or shared household expenses can affect benefits. If the information reported by a beneficiary does not match records or previous filings, Social Security may begin a reassessment. During this process, payments may be temporarily held or adjusted to prevent overpayments. This is a standard safeguard built into the system and does not mean that the beneficiary has done anything wrong. Banking information is another area where stricter checks are being enforced. For electronic payments, it is very important that bank account ownership, routing numbers, and account status are accurate. If a beneficiary changes bank accounts, uses a joint account, or closes an account without updating Social Security, verification checks may be triggered. If inconsistencies are found, payments may be delayed to make sure funds are sent securely and reach the right person. Temporary holds or account reviews are procedural safeguards and are not related to eligibility. Beneficiaries continue to have full rights to correct any errors, provide documentation, and request reconsideration if needed. Timely responses are key. Regularly checking account details, reporting changes promptly, and keeping records accurate are now essential steps to avoid unnecessary payment interruptions under the new rules. Under the updated guidelines, Social Security may also conduct benefit reviews more frequently for recipients of supplemental security income and Social Security disability insurance. These reviews are part of stronger oversight measures meant to ensure that beneficiaries continue to meet eligibility requirements and that benefit amounts remain accurate. While both programs have always included periodic reviews, the updated rules emphasize closer monitoring through improved verification systems. For SSI recipients, reviews are focused mainly on financial eligibility, which includes factors such as income, available resources, and living arrangements. Since SSI benefits are based on need, any changes in earnings, household support, or assets can affect payment amounts directly. It is very important for recipients to report such changes promptly to avoid unnecessary delays or interruptions. For SSDI recipients, reviews focus on medical eligibility and work activity. Social Security may request updated medical records, employment information, or confirmation that work activity stays within the program's limits. These checks are designed to make sure that benefits are issued only to those who remain eligible according to program rules. A key part of the updated review process is strict enforcement of deadlines. When Social Security begins a review, beneficiaries receive a formal notice explaining exactly what information is needed and the deadline for submitting it. If the information is not submitted on time, payments may be temporarily delayed while Social Security confirms eligibility. These delays are designed as procedural safeguards, not as penalties. They help prevent payments from being sent out before all eligibility requirements are verified. The January 1st administrative changes are meant to strengthen oversight, improve payment accuracy, and ensure that the Social Security system operates efficiently and securely. Beneficiaries should take steps in advance to confirm that their personal information is correct, that they are signed up for electronic payments, and that any changes to income, household composition, or bank accounts are reported promptly. By actively monitoring accounts, responding quickly to official notices, and keeping all information up to date, beneficiaries can minimize the chance of interruptions and ensure that their benefits are delivered reliably. These changes do not reduce rights or protections. Appeal options, correction requests, and considerations for financial hardship remain available, but timely action is essential. Understanding these updated rules, preparing in advance, and maintaining accurate records are now more important than ever to make sure benefits continue without disruption. Beginning January 1st, New administrative rules within the Social Security system take effect, changing how benefits are issued, reviewed, and processed. These updates are procedural in nature and are intended to improve accuracy, strengthen security, and modernize payment operations. While eligibility standards remain unchanged, the way beneficiary information is verified and payments are released will follow tighter controls. A primary area of impact involves payment timing. Social Security systems now rely more heavily on automated verification processes. When account information such as banking details, address, income records, or living arrangements is incomplete or outdated, payments may be paused for review. These pauses are not penalties, but administrative safeguards designed to ensure correct and lawful payment delivery. However, they can result in delays if discrepancies are not addressed promptly. Social Security notices can come to beneficiaries either by regular mail or through their online accounts, which means it is very important to check both frequently. Missing or ignoring any notice does not pause the review or verification process, and failing to respond could result in automatic suspension of payments until the requested information is provided. Once the Social Security Administration has verified the needed information and confirms eligibility, payments are generally restarted and any withheld funds may be released. It is important to remember that beneficiaries have the right to appeal any decisions made during reviews, and they can submit additional documentation if necessary. However, the updated rules make it clear that acting promptly is crucial. Keeping contact information up to date, responding quickly to SSA requests, and keeping organized records are all essential steps for individuals receiving supplemental security income, SSI, or Social Security disability insurance to avoid unnecessary interruptions in their payments. The SSA has strengthened its procedures for recovering overpayments, which is part of a broader effort to make sure that benefits are paid correctly and program integrity is preserved. An overpayment occurs when a beneficiary receives more money than they are entitled to, often because changes in income, household members, or living situations were not reported in time. These stricter recovery procedures are designed to identify errors or discrepancies more quickly and recover any excess payments efficiently. For part-time workers who receive SSI or SSDI, it is especially important to report earnings accurately. Even small amounts of unreported income can result in an overpayment. The SSA compares the income reported by beneficiaries with employer records, tax filings, and other government data to identify any differences. When an overpayment is detected, the SSA issues a formal notice that explains how much money was overpaid and gives instructions for repayment. In many cases, the SSA may withhold a portion of future benefits to recover the overpayment. Beneficiaries, however, have options for relief. They may request a waiver if repaying the overpaid amount would cause financial hardship. If granted, a waiver can reduce or even suspend repayment obligations. Appeals are also possible if the overpayment occurred due to errors or circumstances beyond the beneficiary's control. Following the rules closely, reporting all income and household changes promptly, responding quickly to notices, and keeping accurate and organized records are all crucial steps to minimize the risk of overpayments and avoid interruptions to benefits. The SSA's enhanced measures emphasize the importance of maintaining up-to-date and accurate records at all times. Being proactive and compliant helps beneficiaries avoid payment delays and reduces the financial impact of overpayment recovery. Changes in Medicare deductions and other adjustments to Social Security benefits can also affect the actual payments received by beneficiaries, sometimes starting early in the year. For example, premiums for Medicare, Part B and Part D are automatically taken out of monthly Social Security or SSI payments. These premiums may change based on income or updated costs each year, which means the amount deposited to beneficiaries' accounts can vary. Other adjustments, such as cost of living increases or retroactive payments, can also affect net payments. Because of these variations, it is very important for beneficiaries to monitor their payments carefully and plan their budgets accordingly. Online access through a My Social Security account has become an important tool for managing these changes. This secure online platform allows beneficiaries to see detailed payment information, track deductions, and keep up with updates in real time. The online account also provides access to official notices about upcoming changes, giving recipients a chance to plan ahead and anticipate variations in payments before they happen. Regular use of the online account can help prevent mistakes, identify errors early, and ensure that all personal information is correct and current. For people who rely on monthly Social Security payments to pay for essentials such as rent, utilities, or medications, monitoring the account regularly is vital. It allows them to respond quickly to any issues and supports effective financial planning. Being proactive in checking and managing the account has become essential for anyone who wants to handle deductions and benefit adjustments efficiently. Delays in receiving paper notices from the Social Security Administration can create extra challenges for beneficiaries who rely only on mail. If notices arrive late or are missed, deadlines for reporting income, household changes, or medical information may be missed, which can lead to temporary payment suspensions or administrative reviews, especially for SSI and SSDI recipients. To prevent problems, it is important to regularly check a My Social Security account. This secure platform provides real time access to notices, payment statements, and requests for information, making it easier for beneficiaries to meet deadlines and respond promptly, even if their mail is delayed. Financial hardship protections are still available for people who are unable to repay overpayments or who are experiencing economic difficulties. However, to access these protections, beneficiaries must submit complete documentation and formal requests within the designated timeframes. Managing an account carefully, keeping accurate records, and responding promptly to requests are critical steps to ensure that benefits continue without interruption and to secure eligibility for hardship relief if needed. Beneficiaries with complicated household or financial situations face additional challenges under Social Security's updated rules. Factors such as living with multiple people, sharing bank accounts, having multiple sources of income, or working irregular hours can affect benefit calculations for SSI, SSDI, and retirement programs. It is especially important to review account status before January deadlines to prevent delays, overpayment notices, or administrative reviews. Household composition has a direct impact on eligibility and payment amounts. Changes like a family member moving in or out, or receiving support from someone in the household, must be reported accurately to avoid automatic adjustments. Financial factors, including part time employment, pensions, or investment earnings, also need to be reported on time and correctly because errors or delays can trigger temporary holds on payments or repayment actions. Taking proactive steps is crucial for maintaining uninterrupted benefits. Beneficiaries should verify their account information, make sure electronic payments are set up correctly, update personal details when changes occur, and regularly monitor both mailed and online notices through a My Social Security account. Keeping accurate records and responding promptly to any requests or notices helps prevent administrative complications and ensures that payments continue without disruption. For people who depend on Social Security for essential living expenses, staying proactive and organized is the best way to protect their benefits. In addition, timely reporting and regular monitoring help avoid misunderstandings and prevent financial stress caused by overpayment recovery or temporary payment suspensions. It is important for beneficiaries to understand that even small errors or delays in reporting income or household changes can have serious consequences, including reductions in monthly payments or unexpected deductions. By checking the account frequently, keeping clear and organized records, and responding to notices as soon as they arrive, beneficiaries can make sure that their benefits are accurate and reliable. This approach also ensures that any adjustments or corrections made by the SSA are addressed quickly, reducing the risk of unnecessary financial disruption. Overall, maintaining accurate personal information, Monitoring both mail and online accounts regularly and responding promptly to all SSA communications are critical for anyone receiving Social Security benefits. Being proactive and organized allows beneficiaries to manage deductions, report changes, and track payments efficiently. It also helps them avoid overpayment issues, administrative delays, and temporary payment interruptions. By staying on top of accounts and keeping detailed records, beneficiaries protect their right to receive timely and accurate payments. Accurate reporting and organized documentation are especially important for those with complex living or financial situations because small changes can significantly affect eligibility and payment amounts. Regularly checking a My Social Security account gives beneficiaries the advantage of real time information about payments, deductions, and notices. It allows for quick corrections if something is wrong and provides a way to submit information promptly to avoid payment holds or overpayment recoveries. Keeping records of income, household changes, medical updates, and other relevant information makes it easier to respond to SSA requests and ensures compliance with program rules. Timely reporting, careful record keeping, and proactive account management are the best strategies for maintaining uninterrupted Social Security payments. These steps also help beneficiaries qualify for financial hardship protections if necessary, giving them additional security in managing their benefits. Ultimately, Social Security beneficiaries who stay informed, organized, and responsive can avoid many of the challenges that arise from missed notices, overpayments, or delayed communications. By actively managing their accounts, keeping personal information current, and reporting changes in income or household composition immediately, recipients protect their benefits and reduce the risk of unnecessary financial stress. Regular monitoring of both online and mailed communications, prompt response to requests, and accurate documentation are essential practices for anyone receiving SSI, SSDI, or retirement benefits. Taking these steps ensures continuity of payments, helps maintain program compliance, and provides peace of mind that benefits will be delivered accurately and without interruption. Social Security notices can come to beneficiaries either by regular mail or through their online accounts, which means it is very important to check both frequently. Missing or ignoring any notice does not pause the review or verification process, and failing to respond could result in automatic suspension of payments until the requested information is provided. Once the Social Security Administration has verified the needed information and confirms eligibility, payments are generally restarted and any withheld funds may be released. It is important to remember that beneficiaries have the right to appeal any decisions made during reviews, and they can submit additional documentation if necessary. However, the updated rules make it clear that acting promptly is crucial. Keeping contact information up to date, responding quickly to SSA requests, and keeping organized records are all essential steps for individuals receiving Supplemental Security Income, SSI, or Social Security Disability Insurance to avoid unnecessary interruptions in their payments. The January 1st Social Security changes require your immediate attention to ensure uninterrupted benefits. By reviewing your account, updating personal information, and enrolling in electronic payments, you can stay ahead of administrative adjustments. Staying informed and proactive is the most effective way to protect your financial stability. Take action now to safeguard your benefits and maintain peace of mind in the year ahead.